Say I'm a director of a company. I've come home, opened the mail, and there's a red letter from the ATO saying I've received a director's penalty notice. What does this mean, and how concerned should I be? Hi, I'm Angelo Cadiz from HoganSprowles. We're a firm of chartered accountants and liquidators, and we're here to help businesses and directors who are experiencing financial difficulty or are just doing it a bit tough. Today I'm joined by Sprowles, who's one of our partners, and together we'll be talking about what to do if you've received a director's penalty notice. How are you going, Chris?
Good, thanks Angelo. Thanks for having me. It's quite an honour to be interviewed by the big cheese, as you're known by. So very much looking forward to this discussion. Look, I would say that your question, what does a DPN mean? Essentially, it's called a director penalty notice. It goes by its acronym, which is a DPN. It's issued under Section 269, Schedule 1 of the Tax Administration Act. And look, the whole idea behind this, from the ATO's perspective, is look, they perceive that directors of companies are liable for ensuring that the companies are lodging their returns on time and providing transparency to the ATO in relation to that. Companies can't comply with their tax or super obligations, that they are taking appropriate action to do so. So look, This is just one of the means that the ATO can look to ensure that its debts are being paid on time.
Yes.
It's often, again, I think it's largely around transparency, making sure that directors of companies are lodging their returns on time.
Yep.
And we'll go into that in a little bit more detail around the implications of not doing that. But
that's right. So we're seeing a big increase in activity from the ATO in actively pursuing repayment of these debts. I was reading the annual report from the ATO for FY23, and they were saying that the company debts skyrocketed from $26 billion in FY19 to $50 billion in June 23. So it's a big increase. So it's unsurprising that a key tool that the ATO is using is the director penalty notice to recover these debts.
Yeah, absolutely. And look, I think through COVID, the ATO was very lenient. They're certainly ramping up their enforcement, and this is just one of the tools in the kit, so to speak. It's also a parallel liability, meaning that it attaches to the company and the director, and obviously the directors are jointly and severally liable for that as well. And look, I guess when you receive a DPN, the next question is, what do you do? How do you read it? It's probably a good time now. We can actually show what a DPN looks like. We've got one in front of us here, and look, in terms of the options, etc., you'll see that on page 3 of this particular DPN, it gives you an outline of the various lodgements and tax obligations that are unpaid. And then you'll see there below, it's usually on the very last page, normally the second paragraph from the bottom, it'll actually provide you with, will give you the options required to remit the DPN. And
so there are 4 options.
4 options, and at a very high level. Option A is you pay the debt in full. Makes sense. Option B, you appoint a voluntary administrator. Option C, you appoint a small business restructuring practitioner. Or option D is essentially appointing a liquidator. So the idea is that that at a very high level, that if you were to comply with the DPN within the 21 days by executing one of those options, that the DPN would be remitted. And look, I'll caveat that by saying that there's certain instances where it's not remitted, and we'll go into that.
So when you say remitted, what does that mean?
It means that the personal liability attaching to the director is remitted. The DPN is no longer enforceable against the director. Okay.
Yeah. So when will the ATO be issuing the DPN? Who are they targeting?
Yeah, look, generally speaking, the DPN, it's aimed at transparency. It's holding directors to account for their tax reporting and tax obligations.
Yep.
Directors of companies that are being issued, that have tax debts or ignoring ATO enforcement action, failing to lodge activity statements, etc., and generally just not engaging with the ATO are prime suspects for for this. I mean, generally, you would have normally have received, as a director of a company, some sort of enforcement action against the company. And it logically follows that, after receiving, or the company receiving some sort of enforcement notice that, if you're not engaging and you're continuing not to either pay your debts or lodge them on time, that you're probably going to receive a director penalty notice at some point.
So you'd have a certain idea of that one would be coming, you could say, or?
I would say so. Look, directors of companies, again, it's, you have fiduciary duties to ensure that the company is complying with its obligations. Those obligations include complying with your tax reporting obligations. So look, directors would generally know whether or not they're falling behind on their tax debts.
Yep.
And, if you're in that bucket, well, you really should be, I would say, conscious that, you could be issued with a DPN.
So before we move on, we'll just wrap that up really quickly. So you've received a notice from the ATO. This notice means that you could be personally liable for tax debts to the ATO. So the ATO are really targeting people who aren't being compliant, so haven't lodged their tax returns on time, and they're not engaging with the ATO to deal with these debts. So the next thing we wanted to talk about are the different types of director penalty notices.
Yeah, look, generally speaking, the industry refers to two types. It's not something that it's not a terminology that the ATO use, but the accounting industry certainly does. And the two different types of DPN, what they call it, there's a non-lockdown DPN and a lockdown DPN. And the difference between the two is really around lodgements, whether those lodgements are being made by the companies on time, and depending on whether or not, the type of DPN will determine whether or not the DPN can be remitted by taking one of those options that are provided.
Yep.
And so we'll explore that a little bit further now. Look, a non-lockdown DPN refers to a situation when a company's tax lodgements are up to date. And if that were to be the case, then if the director of the company were to comply within the 21 days or take up one of the options, then the the DPN would be remitted. Yep. Therefore, the personal liability would not attach to the company director. A lockdown DPN essentially refers to a situation where the company is late on its lodgements, and in that situation, the DPN cannot be remitted by taking one of those options within the 21 days. So look, it's very much, again, we're talking about lockdown DPNs, non-lockdown DPNs. It's all about transparency. It's all about lodgement.
Yeah.
There are options. There are options as a director. If you are lodging on time, you can have that debt remitted. If the company is not lodging, and well, look,
how late is late?
Look, it's generally 3 months from the reporting due date. So let's say you had a BAS due, on a particular time. It's 3 months after the reporting date for that. So again, it looks something for directors to be mindful of. You certainly don't want to be in a scenario where you're being issued with a lockdown DPN. It's going to limit your options. Again, taking action within the 21 days won't remit the DPN.
Yep.
In which case, you're really sort of in a position where that liability is attached to you personally. The only real option at that point is to pay the debt in full.
Yeah.
And that's not an option for a lot of people. So again, it's if you can reinforce a point, it's that you are making your lodgements on time. You are ensuring that your ASIC records are up to date.
Yep.
That you're receiving the notices. It's not an excuse to say that you didn't receive the notice. I mean, look, it's every director's responsibility to ensure that their records are updated with ASIC. Yep. And the notices get sent to the address that you provide to ASIC.
So I just wanted to make a point clear. It's sent to the director's address that they record on ASIC. So it's important to keep that address up to date because, as Chris said, it's not a reasonable defence that you didn't receive the notice. So you need to be making sure that you are checking your mail.
Correct.
And you're reviewing these notices.
That's right. And look, I would say this as well. I mean, look, people often get confused with the notion of a lockdown DPN and a non-lockdown DPN. And if we look at this particular notice here, look, it won't tell you whether it's a lockdown DPN or not.
Yeah.
The only way you can really decipher whether or not, or the type of DPN you've been issued, is to, in this instance, it's on page 3. You'll see there column 5, and it refers to, we can read it there, it says, unpaid amount of the company's liability not notified on or before the end of 3 months after the due date. So if you were to receive this particular DPN and you were looking at column 5, you would know that you haven't lodged your returns on time.
So that's the lockdown portion.
Correct.
That you could be personally liable for, or
So
that you are personally.
Exactly. So column 5 would be the personal liability that would attach to the director under the DPN. And if you were to receive a non-lockdown DPN, you wouldn't have a column 4 or 5.
Okay.
So look, just again, it's just an easy way for those that may not know. Like I said, it doesn't tell you whether or not you've been issued with a lockdown DPN or a non-lockdown DPN, but that's one way you can decipher the information.
So the ATO don't really tell you what type of notice that you're getting. It's not the lockdown and the non-lockdown terminology is something more adopted by the accounting industry. But there are ways for you to find out if you have been given with a certain type of DPN, right? You can check your notice. At the back of the notice, towards the end, you'll see certain columns. If you've got 3 columns, you've got a non-lockdown DPN. If you've got 5 columns there and they split it out, there's 2 different, the columns 4 and 5 will give you your lockdown, your non-lockdown portion for column 4 and your lockdown portion for column 5. So you can see which parts of the DPN are attached to you personally. And that brings us to the next thing that we wanted to talk about is the potential damages, right? So one of the reasons we start companies as directors is to protect ourselves from personal liability. So how concerned should we be if we receive these notices?
Yeah, look, I guess the DPN is one way of piercing what they call the corporate veil. People set up companies as a separate legal entity, and the concept being that the directors aren't personally liable for the company's debts. And look, directors become personally liable, generally speaking, by failing to fulfil their legal obligations and fiduciary duties. That's things like insolvent trading, breaches of directors' duties, fraud. And it could be just sort of commercial things like providing a personal guarantee. But there's these statutory regimes that exist. The Tax Administration Act is one of those, and which includes the director penalty notice. So it is one way of piercing the veil, so to speak. And I'm sure there's also, I would say, broader implications on company directors. Look, you're being made personally liable, obviously, by being issued with a DPN. If you don't act, then it cannot be remitted other than by paying the debt in full. But look, in my opinion, it's much broader than that. I think that at that point, at the stage of being issued with a DPN, the company would have almost certainly been issued with some sort of enforcement action by the ATO.
And that would trigger the directors to think about what I should be doing for the company.
Yeah, and it raises the question around the company solvency. That's essentially a debt that is unable to be remitted. I think there's certainly a reluctancy from what I've seen with company directors lodging their lodgements, I would say. Principally because I believe that they're concerned that by providing that information to the ATO, but knowing that the company can't pay that debt, that it somehow impact their ability to comply with their obligations. And look, I think at the end of the day, you can either pay the tax or you can't.
Yes.
I think this whole regime is designed to ensure that directors are fulfilling those reporting obligations. So
even if so you're saying even if you can't pay these debts, you're a bit concerned. You've got all these, all these creditors, the tax debts line increasing. You'll need to make sure that you're lodging these returns.
Absolutely, I think there's huge downside risk in not lodging, because it doesn't matter whether you can't pay the debt. It doesn't matter whether the company can't pay the debt, I should say. You can always have the DPN remitted if the company's been lodging on time.
Yes.
And you take up one of those options within 21 days. So as a director of the company, I certainly wouldn't want to be taking the risk of not lodging and being held liable. And look, the ATO, just because you don't lodge on time, the ATO can make an assessment of what the liability may be for those lodgements that you haven't made. So you're not really, it doesn't really provide you with much protection. Like I said, the downside risk is quite large, and that you'll be held personally liable. Yeah,
so that, I guess the ATO, they've got some special powers to make you personally liable. So don't think that you as a director of a company, you've set up a company, you're protected from being personally liable. The ATO have these special powers. I guess one of the things you wouldn't do is ignore the plan, but what about one of the options is setting up a payment plan? Is this something that you'd consider?
This is, again, absolutely. Look, I think the repayment plan is an option. It's probably an option for potentially companies where they've been issued with a lockdown DPN, and it may be the only way that can be remitted. So if you're a director of a company, you've been issued with a non-lockdown DPN, meaning that the DPN can be remitted if you act within the 21 days. It's a bit of a pitfall. We're seeing this on several engagements where, as a director of the company, you're trying to do the right thing. You're trying to negotiate a repayment plan. The problem with that is, once that 21 days expires, the DPN cannot be remitted. Meaning that if you're entering into a repayment plan, or the company is, that the directors of the company need to be very confident that they can meet those repayments. Because let's say you enter into a 12-month repayment plan, you default on the repayment plan within the first 3 months. The protections you would have received had you complied with the 21 days or taken up one of the options within the 21 days, it's gone. So in that scenario, you've gone from being in a position where you can have the DPN remitted by taking action within the 21 days under one of the options, to being in a position where that no longer applies, and regardless of whether you've made those lodgements on time, you can now be held personally liable for that debt. So look, it's something that every director should be mindful of. And I would certainly say this, that as a director of the company, if you are thinking about entering into a repayment plan and you've been issued with a non-lockdown DPN, you need to be very sure that you can meet those obligations, because if you can't, we talked about downside risk before, you've just exposed yourself potentially to the DPN.
Okay, so we have received a non-lockdown DPN. You said that there are options that you can do to have that debt remitted. We spoke about those options earlier. The first one being to pay the debt in full. Obviously, in the best case scenario, you had the funds, you would pay it in full.
Correct, and look, that's a great option if you've got the money, and it's not a problem if you can pay the debt in full. I think for most people that's not an option.
Yes.
The three options that are provided, they're all forms of, I would say that outside the liquidation, option B and C, they're all forms of potentially debt restructuring.
Yes.
So the idea is that, for companies that just simply don't have the capital to pay off their those liabilities, that this is a form of recapitalisation
Yes.
And it can be done through, in the VA example, for the voluntary administration, through a deed of company arrangement.
Yep.
And in the small business restructuring, again, it's very similar. It's all about trying to do a deal with your creditors to compromise those liabilities. So look, it's a very useful mechanism to think about.
So these don't necessarily mean that you have to close down your business.
No, not at all. Look, I would say no.
Liquidation is one of the options, but what you're saying is you can restructure the debt.
Correct.
And trade through it whilst keeping your business.
It doesn't mean entering to. Look, I would say that liquidation would be would be referring to the finality of the business.
Yes.
I would say that options B and C, they're forms of restructuring. So no, look, it doesn't automatically mean that your company will cease trading, etc. The whole idea behind option B and C is for the company to continue in existence.
Yes.
And that means doing a deal with your creditors and really trying to rehabilitate the business if you can. So look, they're very useful options, a great way to try and recapitalise your business. And certainly something that it often prompts directors to consider these options where they may not ordinarily would have.
And I mean, I guess there's other benefits of entering into these different restructuring regimes or appointments, aside from avoiding personal liability. I mean, you can say we're recapitalising the business, we can start again.
Yeah, that's right. Look, the beauty of I think a VA into a deed of company arrangement, SBR, is it sort of essentially resets the balance sheet of the company.
Yes.
In some way, it's almost the ultimate form of restructuring, and a great way for especially small business to try and recapitalise, because it can often be very difficult for small business in particular to recapitalise, and it's in businesses where they've taken a hit to cash flow. Trying to recapitalise from earnings is very difficult. So unless you've got external capital to put into the business, and most businesses won't be generating extraordinary earnings to try and recapitalise. The other option is to do a deal with your creditors to compromise those liabilities. So it's a great option for many businesses. So
one of the options there is to appoint a small business restructuring practitioner. This is a fairly new appointment, new type of appointment. Do you want to, maybe some people don't know too much about this. Do you want to give some further details of this?
Very high level, came in through COVID. The idea is that they're trying to make it cost effective for small business to restructure. The traditional route would have been the voluntary administration deed of company arrangement. That can be relatively complex and expensive for some businesses. The idea is behind this whole regime is, look, it's meant for small business. So again, it's non-invasive, it's cost effective. There's obviously certain criteria that you need to meet to be able to enter that regime. And it goes back to, we talk about lodgement, to be eligible for a small business structuring. Your debts have to be less than $1 million. Your lodgements have to be up to date. Your employee entitlements, those that are due, need to be paid, etc. So look, again, it's when we talk about lodgement, again, there's another practical reason to ensure that you're making your lodgements on time. The whole regime around director penalty enforcement, etc., is the ATO want to know what the company's liabilities are, and they want to ensure that directors are complying with their obligations. And those obligations include making sure that the company is meeting its reporting obligations. It's I'd say the SBR is a perfect example of why that would benefit directors.
And I'll just touch on one of the other options there, is a liquidation. I mean, I guess every situation is going to be different for directors, but when's the best option for a liquidation?
You may have, again, let's talk about the scenario you've been issued with a non-lockdown DPN. The company's got no hope of paying that liability. And there may be a scenario where the company's just not viable anymore. Look, liquidation is a viable option. I mean, the liquidation regime exists. It's part of the business life cycle. Not all businesses work. Some fail.
Yes.
I think that there's a bit of a stigma attached to liquidation. I think people that you're not a criminal just because your company goes into liquidation, and it's it's part of many businesses' journey, and it's a viable option here. If you issue with a non-lockdown DPN or a lockdown DPN, there's no point in keeping the company going for no reason. If you're accruing liabilities, etc., then you're a director of the company. You have fiduciary duties. One of those is insolvent trading. If that's the case, then you should be appointing a liquidator to the company.
So I'll just run through some of these options again. I mean, the options that the ATO give you is to pay the debt in full, to appoint an administrator, and put in small business restructuring practitioner, or appoint a liquidator. I mean, those last three options, they're services that we provide at HoganSprowles, and that's something that we can help for all directors.
Yeah, I would say that it's really important that any director that's been issued with a DPN goes and seeks advice from an appropriate person. It could be you're an accountant, it could be a lawyer, but you need to seek advice. I think you don't want to be in a scenario where you've been issued with a DPN and you do nothing. And it's not a long period. 21 days is not long.
No.
It could be a scenario where you're on holidays as a director for 21 days. I mean, you need to ensure that you are up to date with your ASIC lodgements in terms of where the information is being sent. You don't have your head stuck in the sand around the company's position. I mean, look, directors will know if their companies are struggling or not.
Yep.
The company would have been issued with some sort of notification by the ATO before the DPN's issued, so it wouldn't come as a surprise, let's put it that way.
Yeah. So if you do get a DPN, don't panic. The ATO are issuing a lot of these, and they want you to do something about it. I guess the worst thing you could do is nothing.
Yeah, correct. Look, and again, you've got it's a short period of time, you've got 21 days. Don't leave it to the last minute. Go and speak with somebody, your accountant, your lawyer, your financial advisor, to ensure that you're making the correct decision.
So we offer all these services that are provided under the Director's Penalty Notice. Don't hesitate to reach out for an obligation-free call to discuss which options work best for you.
Exactly, and look, no question is too stupid in this scenario. It's often directors have been put in this situation there that's quite stressful. We get it, and the best thing you can do is to seek advice. It's to know that what your obligations are, to put into action a plan. And look, hopefully through this this particular seminar we've just completed, we've given you some useful information. The next one we'll be talking about small business restructuring in particular, which will be an interesting topic. And again, thanks for having me on, Big Cheese.
Thanks, Chris, for joining me today. We'll be doing these videos every month. We're here to give you value and tell you a little bit about what we do and how we can help. Next month we'll be talking about small business restructuring, which we spoke a little bit about earlier. So hopefully you can join us next time, and we'll speak to you then.